In light of the financial crisis we're all experiencing right now, the government are offering something like a 3-month holiday on your mortgage. The question I'm asking today is it worth it to take it? Do you really need to? And what are the pros and cons? Stay tuned. Just remember that nothing in this video constitutes financial advice. This is for information and entertainment only. I am David from prettypenny.club. I make videos on investing, passive income and making your money work harder for you. Subscribe if that sounds good to you. So obviously everybody is under a lot of pressure at the moment with having to stay indoors with this coronavirus. Businesses are under pressure, household incomes are under pressure. There's a lot of things working against the economy right now. And as I was browsing through all the different bits and pieces that the government are offering to help, the one that caught my eye was the option of up to 3 months of a mortgage payment holiday. So on the face of it, this looks very attractive. You don't have to pay your mortgage for 3 months, but I thought, what is the real implication of that? At the moment, myself and my wife are very fortunate insofar that we haven't been furloughed. We are still on full salary. We're still working full time, albeit from home. And while that situation could change at any point in time, right now we're both being utilised 100%. So from that point of view, we are very fortunate that our personal income hasn't been affected just yet. As I say, that could change at any time, so it's always good, even if you're in a good position now, to stay abreast of any options, any facilities that the government are offering, and make sure you know about the schemes that are going on in case you need to take advantage of those at some stage. So I came across a piece in The Guardian. I'll leave a link in the description. I basically wanted to talk through it. It's about whether or not you should be seeking to take advantage of this mortgage payment holiday that's on offer. The first point I need to make is that it is not free money. You're not getting a complete break from this. While you don't pay your mortgage, while you aren't making payments towards the capital, the interest is still accruing. So you are going to see an increase in payments after the 3 months that you spend not paying, if that makes sense. Probably the simplest thing to do here is go straight to an example. So for sake of argument, let's say we have a £100,000 mortgage. Our base interest rate is going to be at 2.5%. We'll take that for 25 years. And we'll say we started in January of 2018. And we pay on the 5th. And we have a 3-month holiday. So let's calculate that. So there you can see that before our holiday we would have been paying £449 a month. That after the 3-month holiday has gone up to £455 a month for an increase of £6 a month. So you can see here that if the choice is between really struggling for 3 months to try and meet these payments or taking a hit for an extra £6 a month when things are hopefully a lot better, you might decide that £6 a month is worth it when you consider how your mindset might be affected or how your actual finances might be affected and whether or not you can keep the lights on and put food on the table. The penalty, if you like, of an extra £6 a month is maybe not a big deal in the great scheme of things. Pretty much all banks have been compelled to offer this, and there are a few exceptions. Now, not everybody will get it. You can certainly apply. The thing is, the banks are going to have your original occupation information and your income information from your original application, and if they decide that your earnings are too high and that really you're just looking to chance your arm here, they would be within their rights to say no. Before the coronavirus outbreak, the banks were under no obligation to even have a holiday scheme, but now they do, and around about 1 million mortgage holders have already applied for help under this scheme. Another good point about this is that your credit score will not be impacted whatsoever. Experian, Equifax and those other credit agencies have agreed a payments freeze, insofar that if you organise a payments holiday properly through your bank, your credit score won't be impacted because of missed payments. It would be entirely another thing to cancel direct debits or standing orders. You need to talk to your bank if you want to do this. It's not enough just to say, oh well, I'm going to have a mortgage payment holiday now, to stop your payments under your own steam, to go into your online banking account and just say, nope, I'm not paying my mortgage this month. That won't do. That will impact your credit score. What you need to do is talk to your bank, sort something out and make sure everything is above board. So I've kind of gone into some of the reasons there why it seems an attractive deal. It's cheap money, it allows you to manage your finances better if you're under a little pressure, and all in all there doesn't really seem to be a downside, certainly financially. Be careful that you don't use the scheme too soon. Some mortgage brokers are suggesting that some mortgage holders are panicking and rushing to get their allocation of 3 months holiday in quickly. It might not quite be the right time to do it. For example, maybe your income has stopped, but your partner is still bringing in income. You can still afford to pay your mortgage payment. There's a lot of debate about whether things will get worse before they'll get better for the economy, and you might just want to hold fire and keep your 3 months for when things get a little bit worse. It really makes sense that if you don't need the holiday, you should probably defer using that holiday until you really need it. Further, this scheme may not suit you if you have a relatively short period of time left on your mortgage. Because you don't really have time on your side to claw back the extra money you owe the bank with tiny payments each month, you're likely to see a significantly higher monthly repayment for the remainder of your mortgage. So I hope some of these points have helped you decide whether or not you want to take that 3-month holiday. Another option could be to go to an interest-only mortgage. Now obviously that's not ideal if you're trying to pay down the capital on a property, but paying interest only could as much as half your payment each month, and it would certainly help to get anyone through this rough patch that are having difficult times. As ever, keep communication open with your bank. Talk to them if you're having problems. They will try to help you. After all, it is their money you've borrowed, and it's in their interest to help you get you through these tricky periods. So that's it for this video, folks. If you have found it useful in any way, please leave a like. Don't forget to subscribe if you want more videos on financial well-being, investing, passive income, and reaching for financial independence. We love to talk about finances here, so drop a comment, anything you want to hear about, anything you want to talk about. I'm always eager to get some conversations going. The subscriber count is growing steadily, so thank you to everybody who is already subscribed and is already contributing to the comments and the likes. If you feel there's someone you want to share this with, feel free, get it out there, social media. Let's get this message about investing and financial well-being out to as many people as possible. That is definitely it now. I'll see you in the next video.